FTSE Cup is live in the studio. FTSE 0.34%. We weren't expecting this. We thought there was going to be a break, but I think the market is just going up.
The break will come. It will come very, very soon. The break will come. I think that fund managers are seeing value in the market, especially with the shares of big companies, because they have come down even on the average. And so those of them who are proactive, they are been able to key in and then pack some of them to plan for their portfolios. If you talk of price breaking, certainly it will not be like this, because a big thing is happening out there that will shape the markets. There is no way that you will not consider.
In a few hours we will know where we're headed.
So you will consider that before you know the volume of risk that you want to take from the market. Let me say it's that politics and the markets, somehow they are poles apart. Yeah. I'm telling you. So now we are going to see that politicians will roll in and take charge of what they want, and how it will run the society. The market will somehow begin to, take a stop or begin to bleed. So those who are proactive, they are rushing either to cash in now and take funds from their investments, or increase the volume that they can hold up for some time, which is a brilliant way of, investing in the markets right now. We still see banking securities showing themselves very high on the trading tables. And given anything any day, securities from the financial sector, they remain most of investors. So we have to watch the markets. We have to watch the political scenes. And then even the thing that is happening outside. You were talking about Ukraine. All of those things, they play in and they affect. And that one is even very serious because it concerns a food chain. So how we do this, we just have to keep, watching.
Hopeful.
honestly.
All right, then. Thank you so much, my colleague there, FTSE Cup. I will continue to bring our viewers up to speed with activities, our trading, our RD exchange. Well, that measures the barometer of the economy one way or the other.
We have to. It's our job. We have to do it.
All right, thank you so much. Let's move outside our shores. A surprisingly large rate rise in Australia weighed on shaky Asian stocks on Tuesday and pushed the yuan to a fresh 20-year low, making investors even more nervous ahead of U.S. inflation data and central bank meetings in Europe and the United States. MSCI's broadest index of Asian-Pacific shares outside of Japan fell 1.1% as a Hong Kong market pared back some of Monday's gains. Japan Nikkei inched up 0.3%. E-money futures for the S&P 500 fell 0.58%, while the pan-region EUROSTOXX 50 futures were down 0.86%. Australia's central bank today raised interest rate by the most in 22 years and flagged more tightening to come as it battles to restrain surging inflation, stunning markets and sending bond yields flying. Wrapping up its June policy meeting, the Reserve Bank of Australia lifted its cash rate by 50 basis points to 0.85%, wrong-footing investors who had wagered on a move of either 25 or 40 basis points. The central bank had already lifted rates by a quarter point in May, the first increase since 2010, and many had thought it would stick to its quarter-point moves. The last time it hiked by more than this was in early 2000. Elon Musk has warned Twitter in his latest move that he might walk away from his $44 billion deal to acquire the social media company if it fails to provide the data on spam and fake accounts that he seeks. This is not the first time Elon Musk has suggested publicly his accusation of Twitter may not happen. But the warning delivered in a letter from Elon Musk's lawyer to Twitter's chief legal officer, Vijaya Gadde, marks an escalation. It accuses Twitter of being in material breach of its deal obligations. Elon Musk's threat to tear up the deal have coincided with a plunge in many technology stocks, including the electric car maker that he leads, Tesla, amidst concerns over an economic slowdown and higher interest rates in the face of raging inflation. Twitter shares ended down 1.5% at $39.57 on Monday, a large discount to the agreed $52.20 deal price, as investors bet Elon Musk will either convince Twitter to agree to a lower deal price or walk away. Where oil prices on international markets hedge higher today on an expected demand recovery in China as the world's second biggest economy relaxes tough COVID-19 curbs and on doubts that a higher output target by OPEC Plus producers would ease tight supplies. U.S. West Texas Intermediate crude recorded a price increase of 0.69% to hit $119.30 per barrel. Brent sells at $120.30, registering an upward price margin of 0.66%. Bonnie Light's performance has moved back into the green territory with a price surge of 0.90%, selling at $125.30 per barrel. For the OPEC basket, crude oil dealers offer $114.60, recording a price drop of 2.09%.